Hello, this is Brent Bruce over at Network Funding, and what I'm going to do for you today is try to answer the question of what does it take to qualify for a home loan? Do I qualify for a home loan? What are the things that a bank is looking at when they're going over my financial information? And I'm going to try to do that for you in just a few minutes. Now, down the road here, I hope to put out some additional videos that will give you a little bit more detail about the topics that I'm going to talk about here, but I'm going to try to do this in 5 minutes or less and help you feel more comfortable with the process of getting a home loan and what we're looking for. So the first question, there's 3 questions that we ask. Over the years, I've closed hundreds of home loans, maybe thousands of home loans over the 15 years that I've been doing this. And I've really boiled it down to 3 questions that I'm trying to ask and get the answer for when I'm working with a customer or a client. Now, the first thing we do is we complete a home loan application. And that is going to give me name, address, phone number, employment, how much cash they have in the bank, what kind of assets you have, and allows me to then look at the application and start asking myself these questions. The first question is, does this person pay their bills? That's credit, as you would expect. So we're looking at a credit report. We're looking to see, are there late payments? Are there judgments? Are there bankruptcies? Are there liens? Do you have any credit at all? Have you ever had a credit card, made payments? Do you have a history of being able to have debt and pay it back? So that's what the credit report is going to tell us. Now, the one thing that is a real misconception is the FICO score, the FICO score, the FICO score, okay? Now keep in mind, I've had people with 720 FICO scores that I cannot get a home loan for. They don't qualify. And then I've had people that have a 580 FICO score that I have been able to get a home loan for. So the FICO score in itself, it just doesn't tell the whole story. It's not enough. Now, of course, the higher the FICO score, the better. It's going to indicate that most likely you're going to have better credit, but that's why we have to look at the whole credit report. Now, keep in mind also that when you go online to these free credit websites and things like that, those scores rarely are going to match a mortgage company's scores. Those are consumer credit scores, not mortgage style credit scores. So just don't be surprised when you go online and you have a 720 and then you come to a mortgage banker like myself and we say, no, you have a 680. So those are different scores. Keep that in mind. Now, it's a good way to start, get an idea where you are, but it's just not the same. So the second question that we're going to ask is, does this person have enough income to pay for their existing bills and this new mortgage? And that's what we call debt ratio. So what we're going to do is we're going to take a look at your gross income. Now that's before taxes, your gross income, and then we're going to look at your debts and your liabilities. This is going to be things like auto loans, credit cards, school loans, child support, alimony, and the mortgage itself. Also throw in a little extra is if you have a tax payment plan, if you're paying back taxes or something like that, we'll consider that as well. Now let's say that all those items added together, including the mortgage, equal $3,000 a month. So you're paying $3,000 a month for your liabilities, your expenses there, and you have $10,000 a month in gross income. Well, that's a 30% debt ratio. Now, what we would like to see is a 45% debt ratio or below. Sometimes we're looking for 43 or below. Sometimes we can go as high as 50, maybe even sometimes higher than 50. We want to be careful with that. But just so you know, we're really looking right now at about a 45% or lower debt ratio. So you can do that kind of math yourself. Your gross income, and we're looking at, a monthly income, and then we break it down against your expenses. Now, there's a lot to that. We're looking at the history, the overtime calculations. There's a lot of different things that we look at, which is why you need to come to a mortgage professional. But again, this is the basics of what we're looking for, okay? Now, the third question and final question that we're going to ask is, does this person have enough money to pay for the down payment and the closing costs? Now, what you probably heard there, what kind of stands out is the word closing costs, because most people are thinking, okay, down payment. Well, what's my down payment? How much do I need for a down payment? So maybe you say, I'm going to put 10% down on a $300,000 house. Well, that's $30,000. Okay, great. But what about your closing costs? So you have $30,000, and that's all you have. You have $30,000. Well, that pays for your closing cost or your down payment, but it's not paying for your closing costs. Now, those closing costs on a $300,000 house, they could be $8,000, maybe $10,000, depending on the way that the transaction is structured. So all of a sudden, you might need $40,000 in your pocket to be able to put $30,000 down on a house. So there's a lot to it. There's more that needs to be explained. Now, those closing costs, in some cases, they can be paid for by the seller. They can be paid for by the bank, the lender, as a lender credit. There's different ways that can be structured, but it's something that needs to be addressed, and it's something that you may not have been aware of. Now, the good thing is that there's loan programs out there right now, some of them 3% down, 3.5% down. If you're a veteran of the military, maybe 0% down. But again, you have to watch out for the closing costs and the entire structure of the loan. So you see, the main thing that you need to understand is these are the 3 questions that we ask. But answering those questions, there's a lot of detail, there's a lot of research that goes into it. So that gives you a general idea, but again, the only way you're really going to know is to talk to a mortgage professional. So if you are ready to do that, if you want to see what we can put together for you, and if you qualify, there's no cost or obligation for applying with us, and we're going to explain things to you as I am right now. My name is Brent Bruce. My phone number is 909-463-4750. I work with Network Funding in Southern California. Give us a call, share this video, like this video, subscribe to our channel because we're going to be putting more informational videos out so that you'll know more about the process of purchasing a home and using a home loan without having to necessarily wing it as you go through the process. Again, thank you for watching. Have a great day.